Good morning, everyone. This is Brad Matheny. Today is the 19th of September. Markets are holding up quite a bit. Let me come back over here. And it's going to be a little odd because I don't have the right screen here. But let me drag this over and show you that markets are holding up quite a bit today. I was kind of unprepared to show you this. This is a daily QQQ. You can see the markets are holding. This is weekly, sorry. Here's daily. Markets are holding up a bit today, trying to find a bottom, as we talked about last weekend. But what I wanted to share with you today was the upgrades I've made to the LiveTrades function and how this really plays out. So let me come back here. We're going to look at LiveTrades. We're looking at the 2x ETF standards and just give you a quick little run through on this. So the improvements I've made over the past couple of weeks to the LiveTrades algos are tremendous. First off, let's look here at AGQ. And what we're looking at here is the success ratio, how to understand performance, how to understand what to expect, and how ranking systems roll positive and negative, okay? So what we have here are annual returns. You can see here it's produced pretty well for the past couple of years. We've won 4 of the last 6 trades. Our short-term ranking is minus 12.59. Our intermediate-term ranking is minus 6.42. Given what we're seeing here, what we're seeing is, again, if you were to allocate all of your money into this trading system, this would be the returns hypothetically over the last 2.5, 3 years, assuming we're a little more than halfway through 2022. But this gives you an idea of how it's performing, and this gives you an idea of what kind of short-term and intermediate-term risk you can expect from the system. So short-term ranking is at a negative 12.59, indicates that we're basically looking at about a 12 or 13% short-term risk factor on this symbol, AGQ. We're looking at an intermediate term risk factor of 6.42. This means that over the course of 12 or 18 months roughly, that would be a more moderate risk factor, whereas short term you could be looking at something potentially seeing a 12.59% risk factor. Now ideally I would want to see these be positive over this time frame here for 4 of the last 6 trades winning. It means that we've taken a little bit of a run to the downside. It's starting to turn positive here. That's what we're seeing. Now, ideally, this is still fairly consistent, so we would look for a nice solid win ratio out of this to determine where we're at. This one, for example, is positive. See the 17 here and the 11 here? This gives us a pretty good example that we're looking at very solid win ratios, 4 of 6 winners, so that means the last couple of trades have been very solid. We have a gaining annual cycle here, and it's showing us that it's performing very, very well, whereas this is still performing okay, but again, I would look at this as more immediate risk than this, okay? This is performing very, very well right now compared to this. BIB is performing better than AGQ, but still, when we take a look at this as the way I recommend everyone, break these into 1/10 of your portfolio size. So imagine you had $100,000, you put $20,000, $25,000 into reserve, that leaves you $75,000 left over. You would then break that $75,000 into 10 trading slots, maybe 15. That would break every trade you have into about $500 to $7,500 approximately, or about 1/10 or 1/15 of your total portfolio. And that means that these risks now move from 12.59 to 1.259 risk factor. This risk intermediate moves from 6.2% if you were to just trade this to now as 1/10 of 0.642 or 0.6%. So that's how you would look at it. This particular scenario looks like 1.7% positive short-term ranking, meaning very likely to see a 1.7% gain. And this means intermediate term, we have a very likely or a stronger likelihood of seeing a 1.136% gain. Now, let's come down here and take a look at Boyle. Look at the results here on Boyle. Very, very solid. Very, very solid win ratio and short-term ranking ratio. Excellent results. 3.2%, the way I would look at it, 3.2% short-term ranking, 2.7% intermediate-term ranking. If we log in to take a look at the last couple of trades, you can see here the rotation. The last trade here was minus 22%. But look at the others. 12% with a target, 23% with a target, minus 19% with no target, 38% with a target, and 5% with a target. So now understand that what we're looking at here is the volatility is a bit broader. It has performed actually quite well. If we were to total up these numbers, you got 12% here, 23, that puts us at 35, plus 38 is 72, let's call it, plus another 5, let's call that 77, minus 20 is 57, and minus 22 is roughly 32. These are the last 6 trades, roughly since, let's see, entered January 21st, so this was really early January, or mid-January, late January, one of the first trades. But again, it gives you an idea of what you can expect. So if you were to average these returns so far this year, you would be likely into the range that we see here with this short-term range of 32%, intermediate range of 27% as 1/10 of your portfolio. This would put you in a scenario where you would be looking at about a 3.2% average profit so far this year and a 2.7% annual longer term, call that rolling 12 to 18 month profit. But it gives you a very solid overview of how the system performs. So this system at CWeb has not performed very well. You can see in 2020 we had a minus 30%, then a 7, and then a 1% here. You can see it's 4 of 6 winners, 1%, much more mellow. But we would still want to look for positives. DGP is negative, 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 4 wins over the last 6 trades, still 0.5 or 0.3% risk factors. DIG is positive, positive, positive with 33 and 21. TLT is negative, negative, negative with 1 positive factor here and 1 negative factor here. Now this is interesting, because this negative factor says historically it's not been performing too well, but recently it has been performing well. So let's take a look at the last couple of trades, and you can see here we've got 2 losers, 15% here and 9.47% here. But look at the winners. So you've got a winner here, and you've got a winner here, and a winner here, and a break even here, and a winner here. So we've got 4.5, 4.9, and 6. So that's about 15, 16, plus this one at 1. Let's call it 1% here. So that's 17. And we've got a longer term ranking here of minus 24, given the trades that we have here. So that's what's giving us the longer term intermediate ranking of performance is moderately negative, whereas short-term ranking actually it started to perform a little bit better over the last couple of trades. So QLD had a fairly ugly scenario. This was a big move with COVID, but you can see the win ranks here are starting to perform pretty well. Positive 1.09, positive 3.61. So let's come in and take a look at it, and you can see here we've got a break-even trade. Figured that was going to happen. It's another system I'm working on. We have a break-even trade. We have 5.5%. We have 9.6%. We have minus 12%. We have 5.64 and 7.3. So the scenario again here is, let's try to total these up. 7, 12, 13 plus 24. Let's round it up. 29, and then a break even minus 12 puts us at 17. So we basically, since February on QLD, we're up about 17% or 1.7% taking these trades. And what's beautiful about this scenario is it matches very, very well with the setup. So we're up 17% on over the last 6 trades, meaning that this ranking number is giving us a fairly solid low-end short-term volatility ranking number, and the intermediate term is giving us a 12 to 18-month rolling number, and we can see how the system's been performing pretty well. So when you're looking for trades, hypothetically, if you get into a long trade or a short trade, what you're going to look for is very low ranking. So hypothetically, something maybe like this. Okay, C-Web. Let's take a look at C-Web here and see how it's done over the last couple of trades. We had the 126 loss here and the 15% loss here. But look at here, we've got a 10%, a 9%, an 8%, and a 9%. So we've got about 9, 8, 9, 10. Let's call that about 40, 41%. And then we have about a 26, 30. So that's going to put us about a 40% net loss ratio. It is performing. 4 of the last 6 trades have been winners. It is relatively flat. It's not making a whole lot of money over the last 6 trades, and that's what this is telling you here. So this means it's pretty flat, and it's going to potentially pick another trade, which it's in right now. It's minus 1%. We got in the trade just a couple of days ago. We have a trade protection level at 53. We have no hard stop yet. We have no profit target yet. We're looking to see this thing turn into a profit, turn and move into more of a positive scenario. So I am loving this. Now I'm in the process of adding some new lists to this and restructuring the menu. But again, ladies and gentlemen, this is a very solid scenario for you to be able to pick the strongest and most opportunistic scenarios. Just stick with the strongest ranking scenarios and seasonally, annually strong outcomes. So here you have more intermediate outcomes or weaker. You can see it's rolled into a weaker time frame, narrower annual profit targets. KQ, extremely volatile. We had this one ugly year back in 2018. We've hit a number of good trades. Still, short-term ranking is very positive. And as you can see, we've won 5 of the last 6 trades. So we had a 9.7% loser, a 3% winner, a 0.6% winner, a 3.6% winner, a 4.9% winner, and a 4.858% winner. Excellent opportunities for you to come in here and find your next trades. All right, guys, follow me. Remember, this is all free. This is all free. I'm adding Reddit lists. I'm adding hot lists. I'm adding value lists. I'm adding more ETF lists. It's all here for you to come pick and trade and find the best opportunities for you every week. Come and get it.